Home builders continue to suffer. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Still working through my morning shine of coffee, and I thought we'd have a look at this article discussing, well, AV Jennings, the property and home builder, taking a hit as home builders continue to suffer. Now recently I had a look at just building approvals, how they haven't been doing particularly well. You look at housing approvals, slightly seasonally adjusted, trending a little bit down, while dwelling unit approvals are all over the place. Now construction, particularly house construction or development construction, is a big employer here in Australia. There are a lot of people in the game, a lot of tradies, a lot of business people, small business that are dependent on construction, dependent on this sector. And the fact that, well, AV Jennings is taking a bit of a hit is just another indicator that this sector is in trouble. So let's just jump over, if you're not familiar with them. I brought up their website. This is AV Jennings, and this is one of their developments here. You can see it's all, townhouses and of different scales. They'll take areas and just develop it in multi-stages. We can see here, here's one in Brisbane. You can see under construction the type of product that they build. These are more dense than the traditional spec homes that you'd picture, but they're pretty standard fare, guys. Pretty standard fare, entry-level stuff. 2-bedroom for, whoa, 2-bedroom for 460 grand. Wow. Okay, that's bloody expensive to my mind. There you go. So yeah, their share price has taken a bit of a hit since the beginning of the year. They're at 60 cents. Now they're down at 38, so they nearly lost half. At one point they did lose half. They were founded in 32. So they've been around for a while. They've been through some market tumbles. So let's have a look at this article before we look at their announcement. So, home builder AV Jennings has reported sales are almost half, or have almost half amid the pandemic, and no longer expects a strong full-year result. And we're hearing this more and more. I'm seeing it in the comments too, where people are going, I've got a mate who works in this city in construction, his sales have plummeted. They've plummeted. What does that tell you about confidence? The agents, we'll see this portrayed from the real estate agents in their FOMO articles. Supply's down, property's bound to shoot up. I'm still a little shocked that a townhouse with 2 bedrooms is sitting at 460 grand. I mean, this just shows you here, guys, there's no way that it's the land. It has to be the land. Because all this stuff is just stick on. This is James Hardie cladding here. It would have to be. This here'd be foam, rendered, maybe a bit of timber there. So, you don't want to know how much foam is in these things, in these buildings. You want to make sure they use the right stuff too. And I'm sure AV Jennings would. Well, you'd hope they would. You'd hope they would. You'd expect them to have the systems in place to pick it up. But yeah, you're not paying for real stone or real buildings anymore. So home builder AV Jennings has moderated its outlook and no longer expects its full-year results to better those from 12 months ago as consumers delay major purchases. Well, we've seen this, guys. We've seen consumer confidence just in the gutter. We've seen business confidence and business conditions just plunge, understandably because there's a lockdown. And here's the question. If people are arguing there'll be a snapback, a V-shaped recovery, do you think there will be? Or do you think people will take their time? They may be a bit cautious. Maybe they won't buy that 6th investment property and pay interest only now to write off the tax. Oh, who am I kidding? Of course they're going to, guys. You've got to make your money. It's the only way you can get ahead, because everyone gets to be a millionaire in Australia, even if you haven't worked for it. Property contract sales fell from 100 in February to 57 in March as the pandemic took hold, the company said. There were 51 sales in April, while the May figure is tracking in line with the previous months. The federal government's social distancing restrictions meant auctions and open homes were not allowed, although those have still resumed, as we've seen. But private inspections were still possible, so our agents had to do work for it. I mean, good on them. The downturn was felt across the industry. Sales of new homes fell by more than 22% since the pandemic restrictions were imposed, according to the Housing Industry Association. Sales in March were a record low, and April figures were lower. The claims are based on sales data from the largest 100 home builders in Australia. The association's economist, Tim Reardon, said many customers cancelled contracts in recent months, and this will lead to a significant reduction in building work in the second half of the year. So I just need to have a shine of coffee. So we're seeing these consumer decisions holding off is going to affect the construction game, guys. But also, notice how they're saying in the second half of the year. This is when we'll start to see the real impact. This is why people or the FOMO that's being created to rush out as a first home buyer to get in there now. That's why I question it. Why I'm wondering what will happen at the second half of this year when all this income support disappears, when the business propping up business support disappears, when the construction impact hits. You know, it's a delay. It's like as an architect in the construction field will kind of feel it a bit earlier when certain projects get put on hold. Building approvals, remember, happen after after projects are designed. You design the whole project, you go through all the rigmarole, you go through council approvals, and building approvals to certify signing off on it to build. And that doesn't even necessarily mean it's going to happen. You'd hope it would. But there's leading indicators in construction. This is a leading indicator. Lead time for home building was 6 to 9 months, he said, which meant the easing of restrictions would not prevent the loss of work. The pandemic has also changed AV Jennings' earlier assessment of its full-year result. In February, management said it expected a stronger outcome for the 2020 financial year than the previous one. The company today said the statement was no longer valid. It's using the federal government's JobKeeper wage program to retain staff, with most employees working 4 days per week. That's not a good sign, guys, for a construction company at the moment. Shares in the company were down nearly 40% so far in 2020 amid a wider market downturn. They were trading lower by more than 1% to 37 cents at 1 o'clock. So let's have a look at the statement that they released a couple of days ago to the ASX. So AV Jennings Limited today provides an update on the impact of the pandemic and the measures it has taken in response. The company acknowledges the impact the crisis has had on so many people. We recognize that this is first and foremost a serious health crisis, and from the outset we have proactively implemented appropriate measures to safeguard the well-being of our employees, suppliers, customers, and the wider community. Do you think this is they copy each other's letters when they're writing this down? AV Jennings entered the crisis well-placed and with a strong balance sheet. Yes, I think they do copy letters, good liquidity, and sufficient funding capacity for the medium term. The company's long-term, prudent approach towards acquisitions mean that it is not unduly exposed to short-term fluctuations in asset values. Securing the control of large parcels of land, such as that in Caboolture, Queensland last year, on capital-effective terms that effectively share risk and reward between the parties, helps to protect the company's balance sheet. So they're just going to land bank. Management continues to prioritize its workflows and reduce operating costs and overheads. The mainly horizontal nature of the company's operations enables it to quickly review and adjust the level of site activity. In addition to receipt of federal government JobKeeper support, most staff have agreed to move to a 4-day week, and senior executives have also agreed to incentives or to initiatives that will help to improve cash and profit outcomes for the benefit of all stakeholders, so they're taking a pay cut. In the spirit of solidarity, the board of directors have also agreed to reduce their fees. Market conditions began to improve earlier in calendar 2020 as the company predicted they would in commentary associated with the release of its first half results. The escalating pandemic crisis included restrictions on physical movements of Australians and New Zealanders, saw the markets become challenging, and they remain so. Pleasingly, statements of pre-sales continued to occur largely in line with expectations, with a slight uptick in the number of deferrals. There have also been a small number of recessive, which have been rare. Sales continue to occur. While both sales and inquiry levels are below the levels where we would have anticipated to see them had the pandemic not occurred, they are above our short-term expectations. Net contracts signed in February, March and April were 157 and 51 respectively. While those in May are tracking broadly in line with April, some of the transactions are of a B2B nature, business to business. Sales to builders and other corporate customers rather than retail buyers. And that we believe indicates an underlying level of confidence in the medium and long-term outlook as they are acquiring land for their future operations. That retail sales have continued during this period reinforces the fundamental need that housing plays in all of our lives, or reinforces the fact that housing is the only game in town in Australia for a lot of people. It's where all the wealth of our civilization is going, everyone. Following release of its half-year results, the company said that despite some uncertainty, it anticipated that the full-year outcome for financial year 2020 would be stronger than previous years. The advent of the pandemic and the prescribed constraints on social and business activities that have followed it have depressed consumer sentiment, and the level of new sales is well below pre-pandemic expectations, making the statement no longer valid. The government at all levels has provided stimulus to support businesses and keep people employed, and it is clear that strong action will be taken to support the construction sector and its customers going forward, with housing likely to feature strongly. Whilst short-term challenges no doubt remain, as Australia and New Zealand gradually emerge from the crisis and the economy again opens up, we hope conditions will improve and the company's strong balance sheet and contracts in hand, together with the measures taken to reduce expenditure, leave the company well placed to navigate this period. So there you go, guys. There you go. What do you think? What do you think? It's concerning that this industry is going to take a hit, and, well, we'll see the real outcomes of it next year, or early next part of this year, next financial. Are you in the construction game, guys? Let us know how you've noticed it. There seems to be a lot of work going around in the education sector at the moment. At least that's where we're playing right now. So we're quite fortunate. I don't tend to do much work with developers. I don't like working that cheap, to be honest. Anyway, guys, let me know your thoughts and opinions in the comments below. How is this affecting you? If you're a fan of the channel and you'd like to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can use Gold Pass from the Perth Mint, support us via buying our merch, or use PayPal. Take care, guys. I'll see you in the next video.